G'day everyone, welcome back to Pete's Investing. Today is July 11, 2023, the British Pound US Dollar currency update. On our weekly and daily, we're in a bullish mode. However, we've hit this and broken through this key resistance area at 128.42. So we'll talk about that in a minute. First off, on the weekly, the price has gone up and broken through this 61% Fibonacci level. And our indicator and oscillator here are showing bullish movement and has been doing so for some months. Now, as I always say, once it breaks through that 61% Fibonacci, that's always a key area to look out for, and we may see further upside with the British Pound US Dollar currency. On the daily, you can see it more clearly between that support at 118.05 up to 128.42. It's bounced off the resistance a couple of times and it's finally broken through in the last couple of days since our last video. So let's see what it's doing on the hourly. So first off, we do track divergence, and divergence are independent from the trends of the weekly and daily. So you can see here we had a bullish divergence on the price versus a bearish divergence down to that point on the CCI. So as the CCI keeps dropping there, we expected it to break, and it actually fell down and hit our initial target area and actually broke through that target area. There was another bullish divergence on the price, bearish on the CCI. When it peaked, it eventually broke to the downside and hit our target area over here. And more recently, we had another bullish divergence here, bearish on the price, broke up, hit our target area. And now we're in process of another bearish divergence. So even though it's broken up through the resistance, we expect it to eventually break to the downside and probably break below this resistance again, or at the very least gravitate back towards it. So before we get too excited about tracking it, we need to make sure that we see a substantial decline in the price. As well, we need to see the CCI continue to break to the downside. The CCI can start breaking up, so long as it doesn't go higher than that point there, then that's still in play. Okay, that's where we are at the moment. So we might see some retrace to the downside on the hourly chart at least, and even after it broke through that resistance. So at the moment, avoid going along until we see this divergence play itself out, and then we can start taking long trades if and when that does break more to the upside and make this divergence fail. But at the moment, I don't see that happening. Okay, to understand how to trade this and other trading strategies and trading strategies to trade on the trends, subscribe to my Patreon page, where we also look at weekly scans of stocks, currencies and commodities and their divergence. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.